that we've got these large companies and they have differing points of view about where they're putting their money, what they think the markets are going to do. And I was having a conversation with a person about this, and they said, if the big guys don't know, if they can't agree, how are we supposed to make investment decisions? So we'll talk about that a little bit. So what I like is to have kind of competing ideas, right, or conflicting ideas. So let's first talk about positive outlook. So JP Morgan expects continued economic growth, they say, no recession, sticky inflation, and rate cuts by year end. Wells Fargo is citing deregulation, strong earnings, resilient consumers, and U.S. emerging independence. Now, these all have positive marks. Goldman Sachs Asset Management co-head sees tariff volatility but anticipates rate cuts. If the data weakens later this year, he expects broader market rallies, including in European and small cap markets, so stocks. Also, Schroders upgraded its outlook for global corporate bonds to neutral from negative and maintains its positive view on global equities as it expects reduced risk of U.S. recession. So these are four major firms that are telling us that, hey, we expect things to be positive. Now let's talk about our bearish outlook, when they expect things to not be so great. So Bank of America expects that strong labor markets may delay Fed cuts, but weakness could trigger a 0.75% cut in September. They expect the U.S. economy to muddle through with no cuts until a downturn. So they're not expecting any cuts until we see an economic downturn. Schwab described the market tone as slightly bearish from the upcoming week, citing overbought conditions and potential tariff-related shocks. BlackRock talked about uncertainty, remains underweight long-duration treasuries, so maturities longer duration, and maintains caution around the Fed policy. So what do you do? What do you do when the big guys, right, the big men and women who make these decisions can't decide? Well, you've got to have your financial plan drive your investment decisions. So your financial plan should be the driver of when you're going to need your funds, how much you're going to need, and therefore how they should be invested. And then what works for us and our clients is the 3 pillars of investment management. So once you've got your plan figured out and the funds you're going to need and when you're going to need them, you rely on strong asset allocation, some portion of principal protection, and account segmentation.